Let's get a quick audio check-in, and I'm going to grab the screen here. All right. Should be good. Yes. I should be seeing everything. All right. Very cool. So you guys should be seeing my charts. Awesome. And this is our Q&A session before our big tops program, before I unleash the tops on you guys. I cannot wait. Got very special mushroom coffee waiting for this. All right. Sound is good. Excellent. Okay, cool. I'm going to check one thing here again. Give me one moment. Okay, so my microphone is turned up all the way, gang. So it looks like we're good. All right, so fired up. All right, I like it. I like it. Do we get an entry and exit rules doc on? So you're going to get my, all right, let me tackle a few questions, but I want to talk about some setups because we have a number of them that I talked about in both the SF and SO room today. So I want to give you some glimpses as to some of the current trades that I've taken with these tools. So you're going to feel for visually what they look like. And then I also will cover your questions like Karun's, which is, do we get entry and exit rules? You're going to get, I think, actually one better, which is how to build the entry and exit rules with different indicator combinations. So once I teach you how to use grab, wave, propulsion, Darvis, those are all automated. Those are all actually going to give you insight into what it is that you need to have before you make a decision about choppy market trades, trending trades. Should I go longer term? Should I go shorter term? You can give me there. So all those, if you guys can only see the scene here in the room, which is the, a lot of you guys know the world's most famous trading cat. He has come to give us some company. He's very excited about this TOPS presentation as well. All right, so the indicator that comes before the indicators are these grab, wave, propulsion, and Darvis. So Daryl walked you guys through just how easy it is to put the tools on your chart. I will tell you, tomorrow, I wouldn't be too concerned about whether or not they're running because I'm going to be walking you guys through just the workshop, talking about building out your trading plans, creating watch lists. You won't have to concern yourself with your charts tomorrow. Now, by the time we get to Tuesday and Thursday's live trading, we'll have some resources, some links, and make sure everyone's ready to go so that at that point for Tuesday and Thursday's live trading, you can actually trade alongside. It'll be a little trade along for 2 full days. So tomorrow, please don't sweat the tech. I really just want you to focus on the way in which we're going to use the indicators, and you will get the matrix. Absolutely. So it's at the red pill or the blue pill that Morpheus gave Neo. Whichever was the good one, that's what you guys are getting. So I'll give you the checklist, step-by-step on trend following, trend reversal, sideways markets, etc. But let me show you a few examples. All right, meat and potatoes, you bet. Meat and potatoes tomorrow. Mark, I like that. I like that. Gus says we want the coffee. Oh yeah, I'll share all my coffee secrets too. All right, so let us tackle a few questions and also go through some of the positions that the Darvis and the propulsion and the grab have put us in. I'm going to start with the NQ because for a lot of you in some of these tech stocks, this is the touchstone. This is the large market that is often going to be the tide, raising and lowering all the boats, right? John talked about Apple quite a bit in the chat room today. I'm going to show you what I'm doing with Apple, with Facebook, with the NAS right here, with a number of heavily weighted names that I think are going to be sensitive to what has been a little bit of a pullback in Chinese internet stocks, how to recognize that pullback, all that good stuff. So the NASDAQ, first of all, let's keep it really step by step. First of all, we have the Darvis right here, automatically plotted. What does that tell me? I know that there's resistance and support sitting at these 2 levels. It'd be nice if I put the R in the right place. So this top line is resistance, bottom line is support. So I know where the NAS is trading between. And these are not projected levels. These are actual previous support and resistance levels where we've seen a bid come in, where we've seen offers come in. And I want to emphasize that because a lot of support and resistance automation is based on projections. This is not supposition, gang. These are actual levels that the market has shown to be support and resistance, and we just move that forward. It's not a projection, it's actual support and resistance. So if I know that I'm squeezing literally in between these, and I have mostly a bullish bias. Now, how do I know that? It's as simple as looking at the color of the candles right now. They're mostly green. So if I look at mostly the hard right edge of this chart and I see the color coding is green, I'm going to have a bullish bias on the NQ right now. So then you might wonder, well, what about these two blue grab candles, Rog? Well, the heads up that I'm getting from those two blue grab candles is exactly why I bought today. We got the 59.25 buy that we've been waiting for, and I'm a little bit more conservative. So a lot of times traders ask, Rog, how do I know if I'm going to buy or sell? And that's one layer. But underneath that is, well, how aggressively do I buy or sell? And that's the next layer. If I were to have got a breakout through resistance while these propulsion dots were plotting, I would have happily taken some momentum. But once they disappear, I won't take momentum, and I'll take advantage of exhaustion. In this case, support at this floor. That's how many decisions I can make with some color-coded candles and some dots. That's the kind of thing I'm going to teach you tomorrow. But suffice to say, I'm long NAS going into this weekend. So got to talk about Apple, right? What a sell-off here. So the Apple move to 150 was an interesting gap close here. Take a look at right there. Interesting gap close. Not quite closed even. Will I be surprised to see Apple trade at 150, 150 and a half next week? Nope. I'm ready for it because those levels are, in this case, based upon the gap, pretty obvious on this chart. But how do I know what it is that I want to do? I mean, how do I make sure that I'm not running into a buy where in reality I should be selling? Well, I'm going to go right again to the grab candles. I only have 3 red grab candles. 3 red grab candles are not going to make for a daily trend. It's not enough organization. So once you understand how to read the color of the candles, and then we take another look at the moving averages of the wave. In this case, my 34 EMA on the high, the close, and the low. They haven't been trending lower for very long. Now, that's going to sound fairly subjective until I teach you how to read the moving averages. But it's a combination of the moving averages, the red grab candles, and then in this case, I have a nice little gap close. Because I have a mixture of green and blue and red, I know that there's no single market psychology that is dominating the chart right now. On this daily Apple, there's no single market psychology. So I'm going to look for possible exhaustion. How do I know that? Again, that's where the grab color coding comes in. Now, if there is an opportunity to take advantage of Apple intraday, I get a lot of questions about, okay, Rog, I get this works on end-of-day chart. You have a lot of end-of-day setups, but what about intraday? The one thing that I'm going to be looking for next week really closely, and we'll talk about this tomorrow as well, will be an intraday trend reversal. So while the buy on Apple is all about this market getting to a floor and my buying that, there's an alternative we can have here. And the grab candles are actually giving us insight into that. My propulsion stopped, which means the market hitting the gas pedal isn't quite as steep as it was through here, which I like. We're seeing the market sort of level out here, break the Darvist. You can see this automated trend line has been broken to the upside. That's the first sign. And then what I would like to see is the market trade in this area inside the wave. That'll give me a blue grab candle, yet another visual cue. And then if we can break 152.65, I think we could be off to the races. How do I identify all those levels? Why would I even be looking at a buy? Again, because I know to look at these automated support resistance levels and determine what I want to do when we reach them. What kind of momentum do we have? Is it too risky to buy? Is there a floor underneath that we can base off of? Can I trust the fact that the market's a little bit bid? It may not feel that way in a 30-minute chart, but the fact that we didn't punch down to lower lows on this, and we have this nice narrow little Darvis that's broken to the upside. We broke some near-term resistance. And the cool thing about the automating of support and resistance is a lot of times if we want to have a certain position, long or short, what we want, we'll start to see it. We'll see what we want. We'll see a trend line. We'll see a horizontal or resistance or support level that we would like to see broken. We'll just kind of manufacture that because we want to sort of will a position into existence. There's no subjectivity here. The Darvis doesn't care that I want to be long or short. It's going to automate what it sees. And in that way, is that me? It's going to automate what it sees. And in that automation, I'm not willing a position into existence. I'm seeing what really is, not what I want to see. So that's one of the things I'm looking for on Apple. And again, the wave and the grab are giving me a great heads up. Let me give you, and I'm long from the pullback today on Apple. So notice my long NASDAQ and my long Apple are pretty much in line because you think about the weighting Apple has in the NAS. I wouldn't be comfortable being short one, long the other. I'm working against myself in that regard. Let me also show you Facebook here. Facebook was a conversation we had in the chat room. I'm going to show you what we did here. So if I am looking at this current Darvis box, now you'll notice this Darvis is yellow. A lot of people ask me about the yellow versus purple. I wouldn't be too concerned about it, but let me just answer that question right now. When we have a yellow box, all that means is this Darvis was drawn off a new minor high. The new minor high kicked off the countdown to whether or not there was a box. So it starts with a high. That's all that yellow means. If we have a purple, that simply means that the Darvis keyed off a new low, a new minor low. So I wouldn't be too concerned about the colors. They could all be purple, they could all be yellow, they could all be green. It doesn't really matter. But that's how we can differentiate between boxes drawn starting off a new low versus off a new high. But the bottom line is it still just results in support and resistance. All right. Now, speaking of that support and resistance that was automated, notice where the Darvis was drawn here. Notice today's low. This Darvis was valid, and this is really important to note. This Darvis was valid since this candle. So we've known now for 1, 2, 3, 4 sessions that this market has a support weighting in here. We also know that the market is mostly bullish, dominant green grab candles, no question about that. So I'm certainly looking for a buy. And in this case, I'll look for a pullback buy. And then when Darvis automates the support and resistance, I know what I need to do here. In fact, we go to another layer of sort of automation, if you want to look at it that way. I just leave a limit order to buy out there. I'm waiting for the market to come to me. So if this low here, and you can see the numbers that I put out, if this low here, and you can see, let me get rid of the drawing tool. Okay, this low right there was 169.34. You'll notice the zone that I created here between 169.35 and 169.55. That is your park and modify limit order to buy. Even when this market's flirting with 173, 172, my order to buy at 169.55.35 just sits there, good till cancel until it comes to me. And that's where I take my buy. Now, are there certain indicators that I can use to kind of extra confirm this? There are, and we'll definitely go over. I have about 2 favorites for overbought, oversold markets, and I'll walk through that matrix for taking advantage of what amounts to a choppy market with a bullish bias. And again, how do we recognize it? How do we feel confident about the buy? And even more so, what's the validity for the buy? So I'm long Facebook going into the weekend, which again also contributes to the overall long NASDAQ because you think about the weighting in Facebook. All right, so let me walk you guys through. Well, actually, let's take a couple questions here. So yeah, yellow versus the purple, it's nothing to be too distracted about, but that's what it is. One keys off a brand new high and the other keys off a brand new low. Now, here is one thing where it would be interesting. If you see nothing but yellow boxes, that means we're hitting a new high, new high, new high. So there's an inherent bullishness in seeing more yellow than purple boxes. And if you see a lot of purple boxes, those are all new lows that we're keying the Darvis countdown, if you will. And if you see purple after purple, that's a fairly bearish market. What happens when you see a mix of purple and yellow? We don't have a dominant psychology through the box. We're not hitting brand new highs consistently to plot a brand new yellow box. So even the box color will give you some insight into the psychology. The wave did, the grab did, and then the Darvis is even throwing its 2 cents in there. The fact that we do not have propulsion right now is even contributing to just this multi-layered story about what the market trend is. And that market trend is then going to dictate what indicators you use. And I'm going to show you how you can choose from a number of different indicators. In fact, bring the indicators that you're going to be using, and we could even build some customized matrices. We'll be doing a lot of that Tuesday and Wednesday, a lot of customized trading plans depending upon the kind of indicators that you favor. In fact, the kind of indicators that you favor will even say a lot about the type of trading that you're probably most wired for. Okay, so next up here, let me take a few more questions. And as far as options go, even when I'm putting on an options position, and I'm usually very directional, I'll buy calls or I'll buy puts. That's, really the extent of most of my options trading. But every options trade can still begin with a trigger, with a price trigger, with a level at which that plan could be deployed because a certain price level was hit and we anticipate support or resistance there, or even momentum, right? But knowing which we're going to expect has a lot to do with the underlying market trend. So it goes right back to what is the wave and the grab and the propulsion telling us. But even for my options trade, I prefer to have a price trigger. So when I bought Apple today, I did not buy calls. I just straight up bought Apple. But what I would like to do down in this area around 150, if you wanted to put on a put credit spread, I don't know, it lingered there long enough, but you could. You could have gone out and bought straight up calls. Easy way to do that is you put an alert at say 150.25, and that tells you, okay, prices are down near a support level. We're getting a lot of bearish momentum. Picking up an inexpensive call, you can put in a bid and chances are the market's going to come to you. That's the kind of advantage that I like to have. The market's thinking, oh, we're still in free fall and you're pulling your parachute, right? I love that. So let's see. What do the candle colors indicate? They indicate bullishness, neutral, and bearishness. I would not use one tool alone. It's really the culmination of all three, wave grab and the propulsion. But the candle colors alone indicate a very, really easy visual footprint for bullishness, neutral, and bearishness. Okay. All right. So, and I will be talking about 10X, especially during the live trading. I'll be talking about ready, aim, fire. I'll be talking about squeezes. You bet. You bet. And again, each one of those indicators, the best way to begin using those indicators is to figure out what the grab and the wave are telling you about the underlying market trend. When I see a lot of blue grab candles, for those of you that use squeezes, that's obviously very popular. When I see a lot of blue grab candles in a narrow Darvis, I know that I'm in a very good environment for putting on a squeeze trade. And if I have propulsion to boot, I'll show you that matrix tomorrow, but that's one of my favorite ways to put on a pretty bulletproof squeeze. So a couple other markets to take a look at. And this was a week of a lot of central bank activity. And whether or not you're trading currencies via ETFs, via futures or Forex, there were a lot of interesting setups, a lot of bearishness in euro when Janet Yellen shocked the market and when the dot plots showed a whole lot more hawkishness for the latter part of this year. What does that even mean, hawkishness, dot plots? All that means is the market's prepared for a rate hike come December. What does that do to the dollar? Another short squeeze. What does that do to the euro? It sells off. But how can you, using Darvis, using wave, using grab, using propulsion, be confident about stepping in? Because we did. We stepped in and bought that low when Yellen sent the dollar higher and the euro lower. And just really in the time between Wednesday, 2 p.m. and heck, if even I just look at today's current price, forget the high that we hit almost at the we hit almost 120 today. So we stepped in, as you can see here, at 1885, 1920. That was pretty much an easy peasy 100 pips in the matter of a session and a half. So that's the kind of thing that once you know where the support is most likely to be respected, and even when the market's melting down and the narrative is showing up so negatively, you can say, well, this is my buy. And this happens to be the reason my buy is valid. It's showing up with a lot of negativity, but it's landing at a support level. And you can identify your support level automatically via the moving averages and the Darvis. And that's what this euro was. Now, whether you did this on the FXE or euro US, 6 of one, half dozen the other. In fact, it actually looked even better on the FXE. Actually looked even better with this particular pullback to about 114.65, 114.70. That level was out there waiting since the 14th. I mean, talk about being able to watch this level and then this market just come right to you, just knock on the door. Scroll through a few more questions. Okay, so a lot of questions about propulsion dots, and I'm glad that you guys are so interested in these dots, because this is one of those very cool tools that, you know, I took out of the archive, if you will, and it's such a great complement to the wave. And I don't know that I still have this notepad up. Oh, I do. Okay, very cool. Let me show you this notepad, and that is this right here. Not that one. So take a peek. I love Fibonacci numbers based on exponential moving averages, or exponential moving averages based on Fibonacci. I love that combination. And I was at one of my favorite restaurants down in the Keys, and I was sitting there with my computer, and my husband and I were spending the afternoon down there. We had just gone fishing, and I thought, you know what? I don't have my indicators on this computer. So I started messing around with 8, 13, 21. I went clear up to 1,597 on an exponential moving average. So even though these two, especially the 34, is mostly what I focus on, I've been playing around with the 8, 13, and 21. It's faster, what I would call the market putting its foot on the gas pedal type moving averages. When do we see acceleration in the market? Already within the context of a trend. So imagine it's like flying down the highway, but you still have some more throttle, and you're just accelerating while you're already flying down the highway. That's what this propulsion gives you. As the name suggests, the market's accelerating. It's probably just as interesting that the propulsion dots disappear as they appear. In fact, in a lot of ways, I think disappearing propulsion dots can tell us more. And that's also part of the matrix of one of the trading styles that I like to use. Do we not have propulsion dots? Right? So there's a lot of value in seeing when a certain indicator isn't telling you something's happening. All right. So what are the propulsion dots? They're shorter term moving averages. They're very much part of my beloved lazy days lines. I've been using these for, gosh, I went up to 1597, and I used to actually keep these moving averages on my chart. I started doing this, I think, in 2002. So I've kept these on and off. And after a while, too many moving averages get distracting. But I realized I was missing a lot of nuance, near-term nuance, without that 8, 13, and 21. So the propulsion kind of brings that back without being too much of a distraction on the chart. And I love what they tell me. So are there triggers alone, Nolan, for the propulsion dots? Not alone. In fact, I don't want you using any single indicator as a sole reason to trigger a trade. What I do like is when they appear, what will that allow me to do at certain levels? Will I be more aggressive? Will I be more conservative? Am I looking for, say, momentum through a squeeze? Or am I thinking the market could pull back after it breaks resistance? So knowing whether or not the market's foot is on the gas pedal is very powerful. And that's what it's telling me. All right. So let me scroll down through a few more. These are great questions, gang. Thanks. Keep them coming. It may be covered in the course. However, when I have those propulsion dots, okay, great question, Ralph. So what's the difference between the kind of orders that I'll put on with propulsion versus without? See, this is where you got to still step back and look at the wave and the grab, because it depends on the colors there. You tell me you've got a Darvis, propulsion, and blue grab candles, different matrix, different checklist. And it's really simple. It is really simple. It's just a matter of understanding what each one of these tools is telling you. But if you tell me there's a blue grab candle mixed in the mix, different type of expectation. If you tell me there's nothing but blue grab candles and no propulsion, again, it's a very different, again, matrix. So we'll have all these checklists, but to your point, will I wait for a pullback with propulsion? Generally speaking, with dominant blue grab candles, yes. Without them, no. Right? Really, generally speaking. Again, ask yourself, do I benefit from having the market's foot on the gas pedal or do I not? Is it worth me waiting for a pullback or not? When I don't have propulsion, I'm not going to expect resistance to be broken to the upside without a pullback. That's how valuable that can be. So my Momo players out there, I mean, I put propulsion on the chart specifically for those traders looking to play 52-week new week highs, that kind of resistance break or support for that matter with 52-week new lows. So my momentum players are going to love that, especially if you love the squeeze. Okay, how do the candle colors derive? Bob, it's the way they interact with the wave, above or below the 34 EMA on the high or the low. And you guys can get this, and Daryl was walking everyone through it. Thinkorswim, TradeStation, TradingView, you can put these on all of them. So it's the way it interacts with the wave. If we close above the wave, green. We close below the wave, red. Close inside the wave, blue. But I also kept the traditional Japanese candlestick interpretation too, because you'll notice there's dark and light shades of every one of these colors. That represents the old-fashioned, like the traditional Japanese candlestick interpretation of an up and down close. So a lot of times when you get color-coded candles, they don't have variance in color. So you don't know if that was an up or a down close. I like to know. So a down close is always going to be a darker shade of the grab candles, and an up close, like a hollowed candle in traditional Japanese candlestick interpretation, that would be an up close. So up and down, up light, dark down. Yellow and purple would be a choppy market. Rin, sorry. Yeah, but it depends if it's bullish choppy, neutral choppy, bearish choppy, right? So the Darvis can give you a little insight if the market's, kind of being fenced in, but that's where the wave and the grab would add that extra layer to the analysis. So you're on the right track, though. That definitely would be one of the steps. Blue is neutral, not necessarily exhaustion, but blue is neutral, Mark. And, the value of a blue grab candle, wow. If you know when the market's losing a little bit of steam, it's going to change your expectation for momentum. It should make you a little bit more conservative, right? You should be willing to let a market come to a little bit more, because we're not talking about just a screaming propulsion, green grab candle, new 52-week high kind of market. Very different treatment when we get that blue. It injects a little bit of a different psychology, basically one that's kind of cooling off an up or down trend. Okay. All right. So let me also walk you guys through a few more charts. And let's see. By the way, TradeStation 9.5 is what you need. I've had that question a few times too. If you're on 9.1, I believe if you're going to the trading app store and you install the indicator, it will probably prompt you to download 9.5. Which I would recommend. I was on 9.1 for years, and I resisted going to 9.5, and I did, and I actually do like it much better. I do like it much better. Okay, so one of the things I do love, someone asked about 10x conviction and propulsion dots. I love propulsion dots with 10x. So if you guys just finished John's 10x class, yeah, I'm going to definitely spend a little time showing you how I use 10x and propulsion. Think of wave, grab, and propulsion as an aspect of clarity. And then John taught you guys about conviction. You put the two together, it's going to give you a lot of nuanced look at how and where the market's going to accelerate or where the market might stall. What does GRAB stand for? Oh, it's just an acronym for green, red, and blue. That's all that it stands for. So grab candles, just that's an acronym for green, red, and blue. MMOS, yes, they are available. So one of the things that Daryl mentioned on the onset were the two links, and I think Daryl's still in here, and he can share those links with you. There are two shared links. I have them here too. Can I push them through? Actually, you know what? I'll have Daryl push them through, but there are two links, and I'll share them during the class. So the two versions of the Darvis, we have a version for both. Those of you that want a smaller footprint like you're seeing right now, or a bigger footprint, it's really preference at the same levels, just the way in which they appear. I'll have all those for you during the class. But again, I wouldn't worry about having the indicators good to go Saturday. You really want them for the live trading Tuesday, though. So that's going to give you what? Saturday, Sunday, Monday. That'll give you 3 days to get everything squared away on the platform of your choice. All right. Okay, so we covered the candle colors. Cool. What are the arrows for? Oh, those are me. That's just me showing you where I'm getting long or short. And I'll show you how to figure that out on your own, because everything that I'm giving you, I mean, the whole idea, and this is why I'm so excited, the whole idea of what we're doing is, how would I show a blank chart to somebody who's got no trading experience or has had a hard time finding those levels that the markets are keying off of, and automate it? So they don't have to guess at, well, is this the level the market's responded to? Or should I buy here or sell here? All that guesswork's taken out. It's hacking 30 years of blood, sweat, and tears. That's what it is. You know, I've always said I want to somehow, how do I brain transplant my trading years into somebody else? These are the indicators, gang. That's why I'm so stoked. And what I'm even more excited about is it doesn't supplant anything you're doing now. It only supplements. You don't have to take any indicator that you're using off your chart. In fact, while I was putting this class together, I kind of remembered this one excuse that my husband always gives me when he's buying a new tool. Like, you need another new tool? You know, working on the bikes, the cars, or whatever he's doing, right? He goes, yeah, it's for this particular situation. I'm working on this motor and this is what I need. And I'm thinking to myself, how right he is, because can you imagine walking into, you know, someone's garage and looking at their tools and all they've got is a hammer, right? Oh, I just fix everything with a hammer. Yeah, you don't want that guy working on your stuff, right? Same thing with a screwdriver. You know, different tool, different job. But how do you know which? And that's what these indicators will give you insight into. How do I know that I want to play an oversold buy on the NAS? Or how do I know Facebook's a buy now, not yesterday? What price do I want to, you know, buy this at? And what kind of confirmation tool will I make sure that there's actually going to be support there? That's really the value in the wave and grab. So, you know, you have a lot of tools. A lot of you will probably be coming to the live trading in the class tomorrow with a number of tools that you want to deploy in a more accurate way, in a more confident way. That's what we're going to be doing a lot of here. That's really the crux of it. Let's see. On TradingView, the candles are outlined in red. Well, you could change that within your TradingView, John. Yeah, some of this, we did a webinar Wednesday where I talked about the setup. So some of that's going to be changing the chart settings within your TradingView, you know, the different outline colors probably. Okay. All right. So this is being recorded. Niels, yes. Will tomorrow's class be recorded? Gary, yes. So I know some people might have plans on a Saturday. We'll be doing the class from 12 to 5 Central, 1 to 6 Eastern, and it will be recorded. And then we won't be doing the live trading till Tuesday. So that gives you, you know, 2 days to catch up or review. And then when we roll into the live trading where you watch, we put all these matrices. Can you pluralize? Matrix I don't know. You'll get to see me put all these trading plans to work on a 5-minute candle, on a daily candle. Heck, there might even be some weekly trades. Who knows what the live trading is going to bring us, but you'll get to see me trade across multiple time frames. Someone asked if we could even trade tick charts with this. Absolutely. Absolutely. Not my preference normally, but absolutely. Sandy, so if you're at the class tomorrow and then you find out you want to, and you decide you want to, absolutely, we'll take care of you. So if you want to upgrade to the 2 live trading days, absolutely. Absolutely. Position size, Mark, what I will tell you is that is a very customized thing. I mean, that's super customized, right? But what I will give you is how to differentiate between aggressive levels where you do want to put in small position size, and small, of course, is subjective, right? Small to you, maybe really big to somebody else. Small to you, maybe really small to somebody. Who knows? So I will teach you aggressive versus conservative levels, and I'll teach you how to gauge the risk reward, so you can actually decide from a certain level what kind of pip tick point loss are you exposing yourself to, and then at that point make a decision about how many lots you want to put in. So I'll talk about aggressive versus conservative levels. Frankie, here's gold. I actually have a long position in gold right now. I actually do have a long position in gold right now. I'm looking for the post-Yellen sell-off to kind of get some traction, and I am long gold. I still have the trade valid, and you'll notice that we went from green, 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 blue, green, red, blue. Is this a downtrend? No. In fact, one of the things that a lot of traders find they do, even somewhat subconsciously, is they've minimized the markets to two trends, up or down. What you will learn is what a lot of traders don't understand, which is when the market actually goes choppy and what you want to do in a freshly transitioned market. Because this particular scenario is oftentimes an account killer. And I'll show you how to prevent getting stomped by transitional markets, what your clues are, what happens when propulsion lets off, what happens when you see the blue grab candle. And then kind of going back to that position sizing conversation, how do you position size accordingly? How many monitors do I use? Bill, I wrote a book back in 2007, my last book. I think it was 2007. And it was really dedicated to how I could slip a MacBook Air in my purse and trade from a single monitor. And I can. And these indicators really are a big part of that. But right now I have a lot. 7. But you don't need 7. I just think it looks cool. It makes me feel very Starship Enterprise. No, even cooler than that, it makes me feel very Millennium Falcon. All I'm missing is Chewbacca. No, seriously, you can trade off one screen. I will say there's a lot of studies about dual monitor setups, increasing productivity. You really don't need more than 2. Although I feel very cool with my my cockpit of 7. So, will this class in live trading be repeated? Rhonda, it'll be available. So it'll be available again. So if you can only attend Saturday, but you can't attend Tuesday, but maybe Wednesday, yeah, it's all recorded. So you'll be able to watch this at your leisure at some point. All right. 22s, Brian, 22s. Dubs, right? 22s. What else do we have here? Will I take Forex trades? Oh, so that's a great question. What asset classes will we be talking about? I'll definitely be talking about my Euro trade, right? For sure. And where I think we just got an entry the other day. Like I said, a lot of traders are up a good 100 pips on this trade. Already took a little profit off the table. Janet Yellen really gave us a gift. In fact, we even had a tremendous trade on the loonie, dollar Canada. What are those other central banks? And you can trade these with ETFs and you can trade these with futures. What are those other central banks that are doing what the Euro and ECB are doing? What are those narratives that are going to take us into 2018? Because a lot of these currency stories, they rumble 2 and 3 and 4 months before the big move. So yeah, I'll show you how to prepare for that and how to know it's begun, right? So for sure, how to give yourself a heads up on your trading. Okay. To trade that Euro on, say, the futures, ECZ, no problem. In fact, some of the coordinating markets, like we just got long pound. We just got long pound on Wednesday. One of the other trades that we've been in for a while is playing the parallel narrative of as the pound strengthens and we look at the UK coming out of that Brexit cloud, getting long the FTSE via ETF. So you're going to find that we're going to talk about a lot of related asset classes. How does the pound lead me to the FTSE? Or how does a NASDAQ trade lead me to Apple and Facebook and Microsoft? So all these connective threads. And then again, reading the underlying grab candles and the wave, etc. How do I set stops? It depends on the underlying market trend, John. So my stops in a trend follow are going to be a little different than my stops in a choppy market. So every decision that I make has to start with these three indicators: grab, wave, propulsion, and grab and wave for sure. What we do after that, once I understand the underlying market trend, that's going to then vary based upon chop versus trending markets, or even the time frames. Another great question I get is, Rog, how do you know which time frame to trade? Once you understand how to identify clarity with these tools, time frame selection becomes very easy. In fact, even if you say, well, Rog, I know the market's heading up higher, but I want to take advantage of a short. How to do that with different time frames? A lot of decisions about what symbol to trade, unfortunately, almost eclipses the importance of understanding what time frame to trade it on. And that is looking for clarity. We should always be looking for the most clear time frame for that symbol. And it won't always be the daily, and it won't always be a 5. And sometimes it's going to be a weekly, and that's going to change your time horizon expectations and also your risk. And I'll talk about how to gauge that, because if you're trading a 5-minute chart, your risk is very different. If you're trading a weekly chart, your time horizon, your risk is very, very different. And if you impose a stop that is not a match for the underlying market trend, if you impose a stop that does not respect the market's trending, or that you're trading a daily time frame, you're going to find out. Many of you might have had that experience where the market wicks you, gets you out, and then continues in the direction you thought it was going to, because you smothered the trade, or you're using the wrong strategy in the current market trend. All right. So those are all distinctions that have been a big part of my 3 decades at this game. And it is a game, and every game has rules. And that's really what we're going to go through, just the rules of this game. Will I be talking money management? I mean, inherently, Quinn, within the conversation, we'll be talking about money management from the aspect of aggressive versus conservative trades, for sure. You bet. The difference in the Darvis, not the colors, but the length, has to do with, we have a version, and they're the same levels, right? From the horizontal standpoint, they're drawn from the same price levels. But we have one version that backfills, which to me is just easier on the eyes. And we have one that's a much more minimum footprint on the chart. For some people, they don't want the backfill. They want something very minimal on their chart. So we kind of went with whomever's preference. But the lines and the levels are exactly the same. It's just whether or not we backfill, or it's that nice, short, succinct little level. That necessarily not right or wrong. It's really preference, visual preference. But I'll be talking about how I trade all asset classes, gang, because at the end of the day, it's really about price action and market trends. So the way I'm trading Apple, the strategies that I'm going to teach, why I bought Apple at 150 versus why I went with a 240-minute pound US that we took 100 pips out of easy. Every strategy is going to apply to every market trend, every market type, and it's all going to depend on market trends. So do I trade Apple the way I do Amazon, and Amazon the way I do the Australian dollar? You bet. Absolutely. Was Apple a sell-off or a pullback? Apple is a transition, and that's what the grab tells me right now. Apple's about a transition. So does the wave. And I don't have propulsion dots, which is interesting, because as much as we've moved lower, according to propulsion, the foot is not on the gas pedal to the downside, which is, again, so remember I said propulsion being there and not being there. The not being there can tell you a lot too. All right. Can I explain the importance of Fibonacci? Spencer, the most succinct way I can tell you about the power of Fibonacci is it is a mathematical law of nature. The way in which nature contracts and expands, it does so by Fibonacci. Whether that be the way cells replicate, the way a tree branches out, the bumps on a pineapple, the spiralness of a nautilus shell. I mean, there's so many places where Fibonacci applies. There's even I remember reading this, a plastic surgeon who was talking about the dimensions of an aesthetically pleasing face, and it was all Fibonacci. the distance between the eyes and the nose and the lips and everything. It was very cool. It's a mathematical law of nature. We just happen to be using it in the markets. You know, if you think of the markets as a measure of our psychology, our nature, that's it. That's it. Dave, am I still offering the Dallas seminar and the class if we sign up today? Dave, all right. For you, yeah. No, absolutely. No, absolutely. Go ahead and let them know. Just put Raghee said so in the subject line. Tell them you know people. You bet. My pleasure. Mona Lisa. Yeah, I think the Mona Lisa was Fibonacci. Yeah, I think it was. Okay, so is there agenda available for tomorrow's webinar? Joe, just check out. Well, I guess I can show you guys here. Oh, and I want to mention, I'm going to be using the scanner. How many people here are using the scanner? Whether you're using it or not, doesn't matter. But I'll teach you how to even use that when we go into RAF, 10X, etc. For sure. So if you head on over to, there we go, simplertrading.com/profits. You can check out the agenda, if you will, for what we'll be doing tomorrow, starting, I guess, at noon Central, 1 Eastern. It's going to be here before you know it. Susan, I will be at the, yes, I will be at the Money Show. That's also that free webinar, which you guys can get VIP seating for with this class. You bet. AK, what's a fade buy? I'll be covering all that in the matrix, but just generally speaking, it's an oversold buy. It's an oversold level. I put a long position at. Okay. Do I ever go to a white background for printing? Brian, it's so funny you asked that. I don't print as much anymore, my friend. You know what I use? Jing. I'll show you some of the cool little tools that I use and how I journal. And one of the coolest tools I use is a free one called Jing. It just puts a little ball of sunshine on your screen, and I actually do screenshots now. I'll upload them to usually Google Drive or Dropbox. So I always have them with me. And I actually build my trading plan with screenshots now. Yeah. How relevant will this class be in indicators to option trading? Any kind of trading where you're trying to find inflection points, support, resistance, a reaction at a certain point, your timing. So if those things are important to your options trading, we're going to cover all that. Timing, where support and resistance kicks in. When the market's selling off, how can I be certain that this is going to be a support level? For those of you that write premium, you have a lot of people who use the wave and grab and propulsion when they're writing premium, when they're selling options, and they find it absolutely invaluable. So if knowing those price levels that are going to be in play is important to your options positions, and you know it is, then absolutely. The asset class that I use, I almost don't want you guys getting trapped into thinking that this is about an asset class. It's about opening up all asset classes for your analysis. Because the way I trade Facebook is not going to be any different than the way I trade the Swiss franc. It's all about underlying support and resistance. The only caveat is you've got to have a liquid market. You know, if I'm trading a futures contract, it really should be the front month. If I'm trading a stock, I'd really like a minimum of about 750,000 in volume, maybe a little bit less, but liquidity is a big deal to me. Not a necessity, but it is a big deal to me. I jing everything. Exactly. Hey, I get wanting to print things out. I'm a pen and paper kind of girl, but I do like having my screenshots, you know, because I'm going to see so much more. And I might end up with 5 or 6 screenshots. So I'm a big fan of Jing. Okay. 3-minute charts on futures? No problem, Will. No problem. It's again, it doesn't even matter what time frame. I will discuss cost per trade. You know, shorter term time frames are going to have a shorter follow through if you think about how much a market can move in 3 minutes versus 30. But I will absolutely discuss cost per trade as a function of time frame selection, because that's part of it, isn't it? Okay. How about day trading? Any of the E-minis? Will? Day trading is really going to be a function not of my sitting down and forcing a trade on a 5 or 3 minute chart. It really is about clarity. So I'm going to tell you, it's one step better. How do you know which days you should be day trading? How do you know which direction the market could be going in? And I look at day trading as a 24-hour clock. So all of a sudden, you're going to know how to trade Asia versus Europe versus US, use a 24-hour clock. And I think that gives you absolutely an advantage. But you're going to know even more so than how I day trade when I actually execute those intraday shorter term timeframes, which we more generally call day trades, right? Okay. If you're new to trading, Howard, is this class for you? I will say, and if you're absolutely new to trading, Howard, you're getting a really big heads up because you're not going to have to unlearn anything. If your foundation is understanding market trends, this is a philosophy that's a century old by a guy named Charles Dow. Yeah, that Dow, right? So if you're starting off with a basis of understanding market trends as the touchstone of your trading, it's a foundation, and you're not having to unlearn anything. Yeah, I almost, I wish I started that way. I had to learn this the hard way. So absolutely, my friend. Brian, what's coming up for what is coming up possibly in the future for the retail trader? Brian, every year that I've traded, I've heard all the naysayers about, I'm a gambler and, with the markets, how can you make a living doing this? Or how can you make, I've heard it all. What's coming up? More technology. I think more transparency, more access, probably lower commissions, just the same trends we've seen forever. If the stories that I heard back in, say, the mid 90s about the systems trading, right? And the pit guys ripping you off, right? Now it's algos and robots and high frequency. Change the name, it's the same drama unfolding, right? I don't think it's going to be any different. If there is anything, it's more access, it's less cost to access the market, better data. To get fundamental information back 25 years ago, oh my gosh, impossible. Now it comes streaming on your desktop, easy and accessible. I'm very optimistic. If there's a drop in my glass, it's half full. And I think definitely as a retail trader, you have plenty of opportunity to come. Who would have seen Bitcoin and cryptos around the corner? There's always opportunity. I'm very optimistic about, I've seen every naysayer and every no way about trading. No, the market just marches on. That's true. Yeah. I just see more advantage for us. I really do. Can I talk about, if you guys have a symbol for me, I'm happy to look at it, gang. We'll be looking at plenty of symbols and examples. So during those 5 hours, my job is to train your eyes to go, oh, cool, propulsion, blue, wave, bam. That's my strategy. Okay, no propulsion, all green, no problem. You're going to have those. Once you know the colors and the dots, you're going to be able to glance at a market and know exactly what you got to do. Will it be in written form? I mean, we'll take notes together, Barbara. We'll take notes for sure. And then I'll be getting into a lot more detail on that on Tuesday and Wednesday for sure. But you guys will have the general outline, and I'll show you how to build a matrix tomorrow. Okay. All right. So again, thank you for all the questions. Really good questions. Thank you. So if you're interested in the live trading, which it sounds a lot of you are, I got to tell you, the best way to start is just getting the basics of what the indicators are telling you down first, getting the indicators on your chart, getting the basic matrix step by step, how I do it in stocks and ETFs, a lot of cool things happening in ETFs, futures, Forex. And then when we go to the live trading, we're going to be spending 2 whole days together. So we can run across stocks, futures. I have quite a few positions open right now, so you can watch how those unfold. In fact, I gave you a few of them right now. I've got a long position in Activision, I think, as well. Activision, Apple, Facebook, and a few others. And we'll definitely talk about those open positions tomorrow. Tim says, amen. Unlearning is definitely not easy. Absolutely, my friend. So yeah, if you guys are just kind of coming upon this brand new, you bet. That's a huge advantage. Will I show you how to create a watch list? Oh, absolutely. Juan, that's going to be sort of built into the whole thing, because once you know what to look for, you'll have a watch list. And here's the best part. You will have a do not watch or do not trade list. Like, leave this one alone because there's no clarity. Leave this one alone because of the chop or because of the lack of, clear signal from those indicators. Looks like it'll be the keep it simple method. Yeah, that's the plan, Rin. When you're trading multiple markets like I do, you don't have the time to indulge in too much minutia. You got to keep moving. And then you see the connected threads. Johnson & Johnson. Sure. I'll throw Johnson & Johnson up there because I've actually been watching this one. You can see the lines I've drawn. Yeah, I'm interested in an oversold buy here. And I'll show you exactly the matrix that I'm going to use. I haven't done it yet. Have not done it yet. But Johnson & Johnson would be a very cool example for tomorrow. Thanks, AK. So let me mention something about, a lot of questions about what we're going to be covering tomorrow. All right. And as well as the live trading. All right. So live trading is going to be all day. So if you have questions about pre-market, pre-Asia, the open, equities open, ETFs, futures, Forex, we'll have plenty of time to do that. We did that on purpose. This way we've got plenty of time together to cover multiple asset classes. That's the live trading. But tomorrow, it's really going to be, how do I take the 30 years, show you 4 simple indicators to use, and allow you to automate all your analysis? How do I use the propulsion? How do I use limit orders? What the grab and wave tell you about what to trade, what not to trade, choosing different time frames. That wave and grab candle combo is going to make every other indicator that you've ever used, you're going to deploy it in a better way. Propulsion, if you're a momentum trader, that's going to be a total needle mover for you. Total needle mover. And then if you've always wondered, well, which support and resistance level do I need to key on? How do I know this is the right price? Darvis is going to be your new best friend. So automating the decision. So rather than working on your car all the time, you're just driving the heck out of it. That's really what I want you guys to be able to do. Focus on the job of trading, not, am I looking at the right level? Is this a buy or is this a sell? Should I be more aggressive? How do I know when to be more aggressive? Is momentum on my side? All those kind of questions. So what else do we have here? NetEase, Warren, you know what? I've got KWeb and that whole host of Chinese internet stocks keyed up for tomorrow, for sure. That one's been a very interesting juxtaposition of U.S. internet stocks versus Chinese internet stocks. And I've got some really interesting ways you can actually look at both. So yeah, NetEase is definitely part of that conversation. But look, if you haven't already, Warren, look at the larger KWeb and the heavier weighted names within those crane share ETFs. Very interesting stuff. JP, there's a lot of questions here. I'm sorry if I missed it. Matrices, Jorge, that's what it is. See, learn something every day. Thoughts on Moody's downgrading UK? I'm not going to worry about news, Laurel, because it's good to know, but what we want to know is it being priced in? What's happening to propulsion? What's happening to the wave? What's happening to grab? Which time frame would I focus in on to notice if the market even cares about any piece of fundamental data or news? Okay, so that is what we're going to be doing tomorrow, starting at noon Central. Again, how do you take 30 years and just hack it? How do you basically automate a lot of the heavy lifting in the markets? Which levels to buy or sell? Do I want to buy or sell? Do I have momentum? Are we losing momentum? Is the market neutral, bullish, bearish? That is what the wave and the grab and the propulsion tell you and the Darvis tell you at a glance. All right. Okay. So I think we've covered, and I'm just kind of, I'm trying to catch up with the questions here, gang, but I think we've covered most of it. So thank you so much for, first of all, if you've downloaded it, I am blown away. Those are the top 3 indicators at the TradeStation store right now. That blows me away. So that's very cool. That actually that blew my mind. How neat is that? So check them out. You guys are going to know how to use them. I'm sure there's a lot of people that are downloading them right now, but you got to know how to put these recipes together, put these step-by-steps together. But very cool. That's pretty neat, got to say. All right, gang. I will see you all tomorrow at noon Central, 1 Eastern. And then you will have the choice to upgrade to the live trading, or you can actually check out the live trading days. And where are we? There we go. That was my spreadsheet, which I'll share with you guys too. All right, so there you go. If you're not already a member of Simpler Futures and you're interested, I saw a lot of questions about futures and Forex stream by. If you are interested in futures and Forex, we are, wow. Okay, so we're offering a really good deal on 6 months. Actually, it's a really good deal. So our most popular is this one right here, the live trading and the class. You can see me put this all to work in a live market. We do a lot of interaction. I mean, there's a reason we leave the whole day open for this. We'll build a lot of customized trading plans and such. But if you're ready for some futures and Forex, this is an excellent deal for 6 months of membership. So that's actually a really good deal. All right, gang, have an awesome Friday. I know you're going to have an awesome weekend because you guys will be hanging out with me tomorrow. We're going to have a lot of fun. Can you upgrade to Elite? Andrew, just reach out to customer service. They will help you out. Support at simplerfutures.com. They will absolutely hook you up. Okay. And then whatever questions you guys might have about the actual service, ask customer service. They'll be happy to walk you through it. You bet. All right. Thank you so much, gang. Blown away. Thank you for the questions. And I'll see you tomorrow.